You are listening to chartingwealth.com for Tuesday, the 28th of November, 2017. Hope that you had a fabulous Thanksgiving holiday. Of course, we had a very shortened trading week last week. Full week on tap this week. Let's see how everything is shaping up and how it looks in the last trading week in November. Remember, Friday is the 1st of December. We see that stocks are down just a little bit for the day. The S&P 500 down 0.05%. The Q's down 0.04%. We see that the 20-year bonds down 0.14%. And gold up 0.42%. Let's jump first right into the S&P 500. Now, as we look at the most valuable indicator that we use, which is the price percent oscillator, it is heading down at this point. It had popped up a little bit over the course of the past week, but so far, and it's just the first day of the latest 5-day candle, but it's interesting that it is down. Derivative oscillator actually peaked all the way back on the week ending the 3rd of November. And remember, the 2-day chart is now in a downtrend. The weekly, of course, is still in an uptrend. And of course, it's just the first day of the latest 5-day candle. We're using Heikin Ashi, not traditional candlesticks. Heikin Ashi means average pace. We find that they are much more helpful to us in tracking things. Look at the 2-day chart. It currently is, the derivative oscillator is actually losing downward momentum. We see that the price percent oscillator is pretty much gone flat, and we have 4 up candles at this point on the 2-day chart. So again, still confirmed down on the 2-day, but could be rotating over to an up move. If it does, of course, we want to look for a trade going up in the S&P 500. Don't have it yet, but it could be coming this week. What's happening with the 4-hour chart? It's sliding sideways right now. May cross over going down and then pull back up. And we may look at some trades later. It may just be resting and getting ready to bound back up. Remember, we don't forecast. We trend follow. Whatever the charts tell us to do, we'll do. If they won't give us a clear signal, we don't do anything, because the first rule in trading is don't lose money, trading and investing. Second rule, make money. What's going on the Qs? Remember, the Qs sees both the weekly and the 2-day chart are moving up. They have been since, of course, the weekly crossed over back on Friday, the 27th of October. And we have multiple up candles, and so far this week is off and moving up. Prices above both the weekly and the 2-day trend line. Not going up so far this week quite the angle it was in the prior week, but it is going up. Derivative oscillators gaining energy. As we look at that 2-day chart, what do we see? We see, of course, the 4th 2-day candle with up movement on it. Now, again, as we continue to look at things, we see derivative oscillators continuing to lose energy. It looks like it lost a little bit over the course of this latest 2-day candle. The derivative oscillator, the price percent oscillator is continuing to move up about the same angle it had on the last 2 candles. So that's pretty good. And again, like we said, price movement well above the 2-day and the weekly. What are we seeing on that 4-hour chart? Well, we had that crossover going up, didn't we? And we had a jumping in point in the afternoon on Wednesday. You could have gotten in around 10:30, looked at it then, or around noon. If you were just going to do our traditional method, you would have jumped in at 154.98. And of course, it peaked out at about, well, I guess it peaked out actually this morning at 156.56. So again, you know, we've seen some decent up movement in just 2 days. So that's not bad at all. Again, if you use that 4-hour chart as your jumping in chart, do keep an eye on things, because it is losing momentum on the derivative oscillator. Price percent oscillator is rolling over, heading down a little bit. Again, a little bit of down movement over the course of the day. But again, keep an eye on things, remembering all things being equal, the charts tend to move in the direction of the largest chart. And of course, the largest chart, the weekly, is moving up, as is the 2-day. So we'll continue to keep our eye on things. Just an aside, we are working on Chapter 6. It'll be coming out sometime this week, God willing. Let's move on to TLT. That's the 20-year bond fund. What do we see going on there? Down for the day, 0.14%. Still, well, what have we had happen? That's very important, even with that down movement, because of the type of, again, measurements that we use, the price percent oscillator and the derivative oscillator. We have seen a crossover on our weekly chart going up. Again, it's not confirmed yet. It's just the first day of a 5-day candle, but it looks like that is underway. We will call that at the end of the week if indeed that does actually occur. We talked about it getting very, very close over the course of the last week and talked to some of you about looking at possibly trading it. Of course, you probably didn't jump in since it was a down day, but we are seeing that more and more confirmed. We'll continue to keep our eye on it. If it's a real weekly vertical crossover, it will sustain itself during the next several weeks. So we shall keep an eye on things. Remember how powerful those weekly vertical crossovers are. What do we see on the 2-day chart? Of course, it crossed over going up back on the 3rd of November. Went up for 4 days, then down for a couple of days, then up. And the latest 2-day candle that was drawn was actually a red open box candle with some up wick and a little tiny down wick. So again, we see the derivative oscillator losing energy and the price percent oscillator losing energy on that 2-day chart. And as we look at the 4-hour chart, we can see it's getting ready, crossing over, going down after that down movement. So again, maybe you're going to get a nice pullback on the 4-hour chart. Maybe it will sustain that weekly vertical crossover during the course of the week. And if that 4-hour chart ends up crossing back over, going up sometime over the course of potentially this week or next week, depending on how much practicing you actually want to do. It's not fitting our parameters totally, because we didn't have a nice clean crossover at the end of the week, but I will not discourage you, as I said in the broadcast last week. If indeed you do see that 4-hour chart pull back, 2-day chart continue in an up movement, and it crossed back over going up on the 4-hour chart, and the weekly is continuing to be in a crossover position, why in the world would you not give it a virtual trade try? Absolutely, I would encourage that. Okay, lastly, we'll go back to the weekly, take a look at gold, up 0.42% for the day. We look at the weekly chart, we see 3 green up candles over the last 3 weeks. Well, so far this week. So it's really 2 weeks and a day. And what do we see happening? Derivative oscillators continuing to lose downward momentum. Gold is still in a down move, official down move on the weekly chart and the weekly trend. What do we see? Of course, on the 2-day, gold going up. It crossed over going up back on the 17th, Friday the 17th of November. Then went sideways for a couple of days. Actually, we had a doji. It was digesting, trying to figure out what it was going to do. Lots of indecision in that type of candlestick. And then the 2-day candle ending on the 22nd, strong up movement. And the 2-day candle ending on the 27th, again, up movement with a large wick on top. So again, gold moving up on the 2-day, not enough yet to see that weekly crossover. But again, what do we see happening with the 4-hour? Trying to redeem itself. We had that confirmed crossover on the 4-hour back on the morning of the 27th. Of course, it then went sideways the next day. 22nd. Went sideways on the 24th and then popped up again on the 27th. So continue to watch. Remember, all things being equal, the market does tend to move in the direction of the largest chart. But again, with gold, this 4-hour chart, remember, we're getting closer and closer and closer to December the 15th, when traditionally that prescient 4-hour total trading chart on gold does not work. The closer we get, many times the less likely it is to work. And that sort of happened over the last few days, some there toward the middle and the end of, well, the middle of November, toward the end of November, although it has started working again. It appears so far just over a 6-day period, starting on the 22nd. We'll continue to keep an eye on things. Folks, that's where we are as we end the day on Monday the 27th, go into Tuesday the 28th. We so appreciate you being with us. We will be working on Chapter 6 of the book If you'd like to read the first 5 chapters, they're all available for you at chartingwealth.com. You can also find them at our YouTube channel. Please subscribe at both places. The real benefit, of course, by subscribing at chartingwealth.com is, guess what you get? You get our How to Read a Stock Chart video, get the layout that we use at freestockcharts.com for free. Don't have to set it up on your own. We give you instructions on how to load it. You need to use Safari if you're an Apple user. And we also give you our daily market worksheet, weekly market worksheet, and our trade worksheet and their instructions at the website and the YouTube channel on how to use both of them. Oh, I'm sorry, all 3 of them. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.